Welcome to today's earnings deep dive into Boeing's Q4 2025 financial results. This analysis aims to provide a clear and data-driven perspective on the company's performance. Remember, this is for educational purposes only and should not be considered investment advice. Let's delve into the key takeaways. Key valuation metrics to consider include the price-to-earnings, P7% year-over-year increase in revenue, reaching $23.9 billion for the quarter. Commercial deliveries. A significant driver of this growth was increased commercial deliveries, reflecting improved production efficiencies. Defense performance. The defense segment also contributed positively, showcasing steady performance and backlog execution. Profitability metrics. While revenue soared, profitability metrics require careful examination to gauge the sustainability of this growth. We'll analyze these aspects in detail throughout this video. While specific guidance details are not provided in the initial report, understanding management's forward-looking projections is critical. Typically, management would provide guidance on expected revenue growth, margin expansion, and key strategic initiatives for the upcoming quarter and full year. On the key performance drivers. Commercial airplanes. This segment experienced substantial growth, benefiting from increased demand and improved production rates. Specific models driving this growth included the 737 MAX and 787 Dreamliner. Can help determine whether the stock is undervalued or overvalued. Boosting the revenue. Streamlined manufacturing processes and supply chain management contributed to higher production output and reduced costs. However, without specific margin figures, it is difficult to quantify the exact impact of these efficiencies. Detailed financial statements would provide further insight into the company's cost of goods sold and operating expenses. While specific guidance details are not provided in the initial report, understanding management's forward-looking projections is critical. Typically, management would provide guidance on expected revenue growth, margin expansion, and key strategic initiatives for the upcoming quarter and full year. On the key performance drivers. Investors should pay close attention to any commentary regarding the sustainability of the 57% YOY revenue growth. Is this growth expected to continue, or is it a one-time surge due to pent-up demand? Further, any information about potential supply chain constraints or cost pressures would be vital. Defense, space, and security. This segment also contributed to the overall revenue increase. Steady contract execution and nuance with analyst consensus estimates. We can gauge the market's expectations and potential upside or downside risks. Analyst revisions and valuation metrics provide valuable context for assessing Boeing stock. While the provided report doesn't include specific analyst ratings or price targets, such information is crucial for understanding Wall Street sentiment. Commercial airplanes. This segment experienced substantial E ratio, price-to-sales, PS ratio, and enterprise value to EBITDA. EVs included the 737 MAX and 787 Dreamliner. Can help determine whether the stock is undervalued or overvalued. Significant analyst estimate revisions, either upward or downward, can signal a shift in expectations. Positive revisions often indicate increased confidence in the company's future performance, while negative revisions may reflect concerns about growth prospects or profitability. Bull case. The strong revenue growth indicates a successful turnaround, with increased demand and improved production efficiency. Continued growth in commercial aviation and defense contracts could drive further upside. Bear case. Uncertainties such as supply chain disruptions, cost pressures, and potential delays in new aircraft programs pose significant risks. Profitability metrics require close monitoring to ensure sustainable growth.